for you, it's either less borrowing or less deposit, whichever way you would go. So yeah, the down value can actually play in your favour. So there you go. Happy days. I need an Alexa or something in here because when doing the YouTube live as well, I have to have the earbud in, or I just get a microphone. Yeah, that might help. We paid 315 for a new build 5 years ago. Okay, so what's it worth now? Was it downvalued? It's very, very little information there. But yeah, and say the whole street for us was downvalued. I mean, not by much, only by about 10k, but it's still, it's still 10,000 that they downvalue it at. And actually, you've got to think now, with house prices doing what they're doing, which is a slow decline. Let's not get carried away. It's a slow decline. So yeah, chances are it might downvalue and that'll only go in your favour. Can solicitors still do their work even though we're waiting for evaluation? Yes, they should be able to. The only problem is you might run up a bill. Say, for example, the valuation comes out and the lender won't lend on it, or something falls through. Then you might incur costs at the solicitors. So yeah, it's just a risk. They generally start their work when a full offer comes out because they know that it's going to go ahead. There's going to be lending on it. So that's when they generally start the work. But they can do, but it's just a risk that you may face some charges. If the deal falls through, they might send you a bill for the work they've already done. That's just something to keep in mind. But there you go. 405. So what's that? 315 to 405 in 5 years. That's not a bad return, is it? That's not a bad bit of work there. Congratulations. Congratulations. And that's the thing. I think people talk about house prices decreasing. But in the long run, they come back. They will return. So don't worry about it. But the only benefit is if you're effectively coming to the market now, so you can get one at maybe a slightly reduced price and, make some money on it. If you're selling and buying, you won't really notice a difference because your sale might have gone down in value, but then the new purchase might have gone down in value. So there's no real difference to you there. But when it comes to buying, you're coming into it, then yeah, you should be all right. So let's start a new week with a new to-do list. What should I stick on my to-do? To be honest, it's very quiet at the moment. I think a lot of Christmas has kicked in. It's kicked in already. So what is it? It's the 27th today. Holidays are coming. We put our Christmas decorations up the weekend. How exciting was that? Some very excited children. Happy children. In fact, the 2-year-old, I think, forgot. It's your birthday. Well, happy birthday. The 2-year-old forgot the Christmas tree was up, so he went in the living room. It's okay. So first thing on the list today is a review the rate change for an existing client because I think they they're with HSBC and the rates have changed. So that's all good. Debcon case I've got on. That's about it. Jeez, 2 things to write on the list this morning. I say it's very quiet. It is quiet. So there is good availability should you wish to book in a call. Let's have a look today. Yeah, I've had one cancelled today, and so my other ones are later in the day. So there you go. Yeah. And then the week after next, I really think the slowdown to Christmas in the mortgage world has started already. Yeah, it certainly has. Certainly has. But it's all right. It's all right. Not to worry. I've got other stuff to be getting on with, other things to do. So yeah. Oh, tickly nose. But excuse me. Excuse me. Now, don't yawn. I challenge you not to yawn off the back of that. How was everybody's weekend? What I've got one of my clients are currently out house hunting as first time buyers. So I imagine they've had quite a fun weekend looking at houses. It can be very daunting, a very hard work, one to the next, one to the next, and get very overwhelming. But luckily, they've got their agreement in principle in hand. They know how much they can borrow. They know how much deposit they've got. So, fingers crossed, they are successful. And actually, I hope they do get good value, considering of house prices have snuck down a little bit, and that'd be great for them. So, I shall maybe hear from them that they've booked something, or put an offer in. More exciting times. So yeah, it's all good stuff. Just need some questions on here. Feel free to ask anything you want. Any comments on the graph? I was a bit. If one has 80K deposit, would 170 mortgage? So that on that basis, it depends on your income as to how much of the mortgage you can get. Um, the 80K deposit really just comes into like a what does that make the loan to value? So, so you want to borrow 250, 27. What's your annual salary? We have a mortgage in principle and just had an offer accepted. Congratulations. Should we go ahead and apply for a mortgage? Yeah, if the offer's been accepted, yeah, that's when you apply for the full mortgage, because now you've got the details of what the lender will lend against. So yeah, get that done. You also need to get your solicitor sorted, unless you've done that already. But yeah, that's exactly what happens. Mortgage in principle, go and look at somewhere, put an offer in. Now that's accepted, then yeah, crack on. Get the application on 32K a year, feasibly 170 should be all right. Actually, having said that, no, it wouldn't. No, it wouldn't. No, you would struggle. You'd probably only get about 140. Well, it depends on your buyer. It's very difficult to give. Are you a first time buyer? It depends how many financial commitments you got, all the other stuff. But just doing the maths of a 32K salary, 140 will be about. Oh, excuse me. Ooh, 140 will be about your borrowing potential. GBs. Are you not going through an advisor? Because yeah, they should be guiding you through the process more. If yeah, if you certainly got an offer accepted, now is the time to get that in, because the sooner that's done, the better. But now you're onto the sort of conveyancing side of things, and that's where it goes quiet. That's where it takes a bit of time. Morning, David. Hello, we spoke previously. We can now start looking for a mortgage rule. Fantastic. Fantastic. Well, in that time, rates have come down a little bit. We are. I just want. Oh, okay. Rates go down a bit, but might not take. So if you've got an application in and the rates do go down, then your broker can always assess it until it completes. You can change the rate. Just make sure you go through your broker, and they'll make a view on it, whether it's going to be credit checks or risk to application and that kind of stuff. But yeah, don't worry. Get the application in, and if the rates come down, then yeah. That was one lender, David, putting their rates up. Generation Home. Um, so yeah, that was just one lender. That was because there has been a slight move in the Sonia swap rates, slight increase. Now, what that tells me about Generation Home, I mean, it's not all about the swap rates, but I suspect that they price quite close to it. So any adjustment in that could affect them. So it's yeah, it's just a lender per lender. And actually, let me just see. Yeah, they've gone up a little bit again. So have a great Monday, GBs. Morning, Chad. In January, when we contact you, will you let us know at the time of better to do a transfer? Absolutely. Yeah, yeah, yeah. No, that's part of it. So when I've literally just done it for a client, I'd love to show you the email that I've produced, basically weighing up the benefits of a product transfer versus the remortgage. So in that instance, um, it was, what did it save? It saved 500 quid over 5 years to do a remortgage to a new lender. Okay, so small saving. There was a small saving to do a remortgage, but then you throw in the sort of the upfront costs of obviously broker fees or conveyancing, valuations, all that kind of stuff, which are all included in the calculations. The client decided it was better for them. They just wanted to stay where they are and do the product transfer. So that's exactly what I've done, and that was a Generation Home one. So we got that. I got that in over the weekend to beat the price increase. What should I budget for January? Well, I'd go on similar to what we're seeing now, to be honest. Um, depending on loan to values and stuff. If you're looking at a new 5 year fixed, you're probably looking at about five. If you booked a telephone appointment for tomorrow, let's have a look. Let's have a look. Have I got that in there? 27th. I've got how many tomorrow? Two. So you must be either. Yeah, I've got two in there. I'm not going to say names out on that one here. Two. Which one is one needs a remortgage? That one's a remortgage, and that one's a remortgage as well. So yes. Okay. Yeah, got you in there at what time's that? 11:15. Yeah, 11:15. Got you there. I shall give you a call. But yeah, I'm on a webinar until 11, so I shall give you a call after that. Sorry, I mean your fees to budget, and do you auto check for low rates? Yeah, I keep an eye on the rates. Yeah, of course, and the fees. So fees aren't payable. We don't charge a fee on product transfers, but we do on a remortgage. But again, that is all thrown into the mix of the costs associated with doing a remortgage and whether it saves you money or not. So don't worry, it is all checked out. The fee's 495 if it is chargeable, but yeah, it's all thrown into the mix. Don't panic. And if I mean, we charge it when we get you a formal mortgage offer, so quite a way out whether it's going to be a remortgage or a product transfer. So it's not like I say, "Oh, I recommend a remortgage," and then you come back and go, "Yeah, okay, let's do that," and I go, "Right, give me 495, please." It's not like that. We then go away, do the work, get the formal mortgage offer, and then after that, that's when the invoice is generated. So it's not a case of don't panic, don't panic. And again, we're all friends here. It's all good. I am panicking, but fair. Less now since been chatting. Not a lot you can do with rates. They've calmed down a fair bit. So well, I say calmed down. then we have minor, although we haven't had any for a while, minor adjustments. It's they're relatively stable, I think. So it's just a case of dealing what you got. I mean, we could even look at a tracker to see whether that suits you better because looking at that graph up there, certainly we're not. The consensus is we've had the peak in interest rates. So if you go on a tracker, then you could benefit from the stepping down of it next year, when possibly 2025. So that might be part of it. So we'll assess all the options for you, and make sure we get the best deal. Get the best deal for you. And also, if we put you on a tracker, we can look for one that's not got any early repayment charges. So if you can jump off it and fix should things start getting a bit hairy. Not on every track. Some trackers have early repayment charges. So if that was part of the thinking, we would look to get you one that doesn't have early repayment charges and get you one of those sorted out so you could fix if you wanted to. Yeah, certainly it's a key part of discussions with clients right now. A lot of people are interested in them. So we discuss them and throw it into the mix as to how viable it is and whether it actually suits circumstances and that kind of thing. Oh dear. Potentially. Now, if you're on a tracker, you'd be paying 3.3 in 2026, potentially. I suspect we might see them coming down sooner than what this graph is saying. This graph kind of reckons, early 25. I think we might see something in spring 24, to be honest. I've seen other predictions that say spring 24, when the base rate will start to come down. So who knows? You could see the benefits sooner. The thing with a tracker is it does come with the risk of rates going up, of course. Yeah, yeah, exactly. And that's, some people just want the certainty of rate, certainty of payment, and that's what a fix gives you. But you fix on that, and if the rates come down, you obviously miss out on that. But if you're on tracker, then you get the benefit of it. But it comes with the risk that they could go up. So it just depends. But as you say, talk at the time. Oh goodness. I'm so sorry. See where rates are, and yeah, see what the best course of action is then. How much notice they have to give you for rates? Well, it's not notice really. It's about 24 hours. It literally goes up when the rate goes up. So you won't necessarily get notice. Well, you will do, but it will be very, very quick because it literally does track the base rate. So with a tracker does come, if money's tight, with a tracker does come that stress of constantly having to keep an eye on what's happening and what the news and what the predictions are saying about our rates going to go up or anything like that. What's the best website to compare best rates? The best website is to use a mortgage broker. You have an IFA, they might not do mortgages. An IFA, they tend not to do many mortgages. In all seriousness, though, I don't know because I don't use mortgage comparison websites because they are dross. Because I've obviously got my systems that I use, so I couldn't tell you. Couldn't tell you. They're not great. Um, they often build false hopes, because people don't know the ins and outs of the products. So yeah, I would speak to. And why? How come you want to check the deals yourself? Do you not trust the IFA to give you the best one? I had a client once, who was like, "Oh, I've seen this deal on this website." I'm like, "Right, okay, but that doesn't help you because of X, Y, Z." He's like, "Oh, right, okay." So I said, "Here's the option." All right, but I found this on this website again. That doesn't help you. So at the end, I was like, "Whatever." Warning: will mortgage lender decline because of unknown status on credit file? Depends. Depends what it is. Probably not. Does it show across all agencies as unknown status? What is it? Is it a credit card? Is it an IVA, for example? It really depends on what it is that you're dealing with there. But I wouldn't have thought so. Again, without knowing much detail about what it is, it's difficult, I'm afraid. Ah. Um, David, I know I can always count on you to hit the like button. If everyone could do that, that'd be really appreciated, so that we can maybe get some more people on the live, to get them along. So thank you Thank you very much, user 123. I can see your liking there. That's very much appreciated. Caveman, thank you. Current burn, awesome stuff, guys. Thank you. I appreciate that immensely. They were previously stating it was a mispayment, then known status. We have provided statements to confirm repair. Okay, interesting. What was it? What was it? Was this a credit card or something? Some sort of hire purchase? Again, if you've got the evidence, yeah. If you've got the evidence, then if it goes to an underwriter, you can clearly submit that evidence. If it goes to, I mean, there's one lender who, for example, would decline and go, so one credit card for my partner, then another bill for myself. Mobile bill, I wouldn't worry too much about. Credit card, I mean, how long ago was it? Again, if it was a long time ago, I wouldn't worry. But like I say, if it does go to the underwriter, then you can stick evidence in their face and say, look, it is paid. It's just weird. I wouldn't put too much reliance on that. The lender will check it and they'll come up with their own opinion. Don't worry too much about it. Thank you for the likes. That's very good. Thank you. Let's see if it attracts more people into the live to ask some questions and get a discussion going. As always, this is being recorded on YouTube. It's also a YouTube live, so you can go and watch it back there if you so wish. If you can't get enough mortgage content in your life, then feel free to go and watch it if you really want to. It's just providing access to it if you like. There's also some other videos on the YouTube channel about the week, how it goes. You'll probably see all my frustrations on there. Last week was a shocker. I had a mare of a week last week. Oh my god! Started off Monday with Tuesday I went to the gym, had a swim, and forgot my pants. So I was due to have a meeting with a client, but I had to cancel that because I wasn't going to sit there commando through a meeting. So I was like, oh, so I had to get home and put my pants on. Obviously, put my jeans on first, but yeah. Mortgages baffle my brain. Thanks for being around to help people get clarity. Oh, thanks, Claire. That's what I'm here for, to unbaffle it or to take the baffle on for you. You literally, if you're a client of mine, you pass details over and I'll sort it out for you. You don't have to worry about it. You don't stress, just pass it off to someone and I'll deal with it. That's what I'm here for, Claire. Try and keep it simple. I'm one for minimizing stress in my life, so we just keep it simple. We don't overcomplicate things. We don't overstress about things because everything, when you look at it, it can be sorted. We can find solutions. No need to panic on things. Keep it calm. Keep mellow. See what I did there? But yeah, last week was an absolute rubbish week. It's also getting very quiet in the mortgage world. Christmas wind down. Hence why, I mean, it's been a busy couple of weeks, hence why I've not done many lives, but things are a bit quieter now. I also do factor in, obviously, TikTok is an important part of my. Oh, I just had a thumbs up on the live on YouTube. Thanks for that. Yeah, I do factor in these lives into my day just to reach out to people, to see if I can help at all, and to spread the love. That's what it's all about. The coffee's starting to take effect now. Oh my god, that fly is back. Oh my god. I don't know how it lives in here constantly. There's nothing for it to eat. There's a plant, I suppose. But there you go. You could eat that. Eat the plant, but I forgot my lunch today. So this week's already started off as a bit of a dodgy one as well. Well, there you go. There you go. What are you going to do? Just got to hunker down and deal with it. Deal with it. I did a video. When was it? I think last week about mortgage fraud, and some of the replies to that, some I've had to delete. But oh my god, why do banks put limit on the amount available on your Access Bond account? Sorry, what is an Access Bond account? Do you mean your deposit account? What are your broker fees? Are you whole of market or panel? We are certainly whole of market. Absolutely, we do not. A panel is awful. Fees are generally determined on the work we're doing. For example, for a product transfer, we do not charge a fee. For a new mortgage, it's 495. So, yeah, there you go. But it's all agreed up front. We have an initial call, we have a chat about stuff, and then tell you. So, it's all agreed up front. It's the extra money you put into your bond over and above your monthly debit order. Your bond, are you American? You're using very American terms. You are using Ange, you're using quite American terms there. South African, yeah, it's your case. So yeah, you're not using UK terms. You get access to that money through that account. I'm not familiar with what you're talking about. I'm a UK mortgage advisor. Can I apply for a remortgage now if mortgage ends in May 31st or wait till the end of this month? So May, what are we now? November. Ooh, you probably wait till next month. 6 months prior to your deal ending. So 31st December, January, February, March, April, May. Oh, you could no, you got to wait till the end of the month. I'll do it in December. December's when it's gonna. Yeah, wait till the end of the month, and then you should. To be honest, depending on your lender, they might send you a letter to say, you know, 6 months until the end of your deal. So here's what the rates are. To see what happens. But yeah, end of this month, next early next. But yeah, good idea to start looking at it nice and early. I like that. Reason being, yeah, I mean, it doesn't do you any harm actually. It only helps because if you look at it sooner, you can get it sorted out. You can. There's no rush. There's no panic. And if rates decrease between say now and when your remortgage is due to take place, then we can just review them. Do you think you're fairly compensated for your work? Interesting question. Very interesting question. I think, wow, in quiet times, the answer is going to be no because it's quiet and there's not much work going on. In busy times, the answer would probably be yes because the money will be coming in. So it's a very interesting one. I would say the fee I charge, that's the lowest I'd go because the work that is involved. A lot of people think it's just tapping a couple of buttons. It's not. It's all the compliance. It's all the report writing and stuff that goes on behind the scenes. So there is actually a lot of time that goes into it. And it's not just me. I have an admin who actually creates some of the letters as well. So there's quite a lot of work that goes into it. So that fee, ideally, it would be higher, but I don't want to put that cost onto a client. So we keep that low. I then have other costs that I have to pay out. So checking ID, for example, is a cost. So this is all before any work has been done. I have to check that you're legit. I have to check the ID. The way our processes work, it's all remote. So there is a cost to sending out all the documents for signature, electronic signature. There's a cost associated with that. So there's also the access to the systems, the insurances. So of that fee, minimal actually ends up in our pocket. Then we have to wait until the end of the mortgage to get paid by the lender. It's not as much as you might think it is. I mean, it's okay, it's all right, and that depends on the size of the loan, really. So it's a percentage of the loan. Um, so if you're dealing with, say, a sub £100,000 loan, it's going to be a couple hundred quid. So in all, you might earn 300 quid for doing a low sort of value mortgage. Of course, for the higher ones, then it gets better. But I don't turn down work because of the loan size. I will do it. Some brokers have a minimum loan they deal with, which I think is a bit off, bit rude. But in all, I've waffled on about that. I think it's okay. I think it could be slightly better. Okay, so of course everyone wants to be paid more, don't they? But I'm not complaining. It would just be nice if it was slightly better from the lenders, maybe. I hope that answers your question, but um, perhaps not. I've waffled on a bit with that, haven't I? At the end of the mortgage, that's crazy. Yeah, it doesn't take that long before you see them. Doesn't that take? Yes. For example, I worked on one mortgage for the last 11 months. It completed in October, and I'm still waiting for payment on it. So yeah, and that's why we charge a fee, because there's a lot of upfront costs and a lot of work that goes on up front, and then it could be say it's a first time buyer, for example. We do all the work, do the assessments, get the mortgage in principle. Then they go house hunting, and that might take a couple of months. Then they put in an offer, gets accepted. Then we put in a mortgage application. Then conveyancing takes place. It might be another 3 months, and then it's got a complete payout. So you could be talking 6 months quite easily before you get paid at the end of the day. So yeah, there is quite a lag to it. So it's not as rosy as people sometimes think. That that's all right. That's why we charge a fee, because we do have those costs up front to cover and all that kind of stuff. So sorry about that, but it's all part of keeping the processes slick, um, working as best we can for our clients. And also, when you become a client of mine, you get, obviously, if you need to book in a call, there's more availability, all that kind of stuff. Can I put an offer on a house before getting a mortgage? You can do, yes. You just need to be sure that you're going to be able to afford it. So, what a mortgage in principle does for you is tells you how much you can borrow feasibly. So, when you put an offer in, you kind of can be confident that you're going to be able to get a mortgage for that and be able to afford the house. So that's why some estate agents, I don't know why I spread that out. That's why some estate agents want you to have a mortgage in principle before they allow you to view and put offers in. But in short, no, you do not need one. In a longer answer, some may require you to have one, and it's just for your own sort of peace of mind and surety. Is that a word? That you'll be able to afford what you're offering on, basically. No problem. You are welcome. You are welcome. Happy to help. Do I need to be aware of Amy? Depends who Amy is. Anything grade two listed more? Oh, crikey, grade two listed. Uh, all that will all depend on the valuation, the valuer's comments. Yeah, it comes down to what the valuation said, what the surveyor says. Um, could be tricky. Lenders might not want to lend on it. Let me just do a check on some criteria for you. Let's have a very quick look at this. See lenders who will lend on grade two listed. You might be limiting your choice of grade two listed. Let's have a look. Okay. A lot of the mainstream lenders will. Let's just take Halifax, for example. Halifax can potentially land on properties that are grade two listed. Property must meet minimum criteria, must be habitable, readily saleable, structurally sound, and be able to have buildings insurance arranged upon it. Mortgage advance may be wholly or partially retained, depending completion of works required to bring the property to a suitable condition for lending. Property acceptability. is based on a satisfactory valuation report from the bank's appointed valuer. Non-standard construction will be assessed on an individual merit. So it just depends. It depends. I mean, there's a lot of lenders that will look at it, so that should be all right. HSBC, yeah, they'll be happy with it. So you shouldn't be too limited. In fact, most will. There's only just a couple here that won't. It just depends on what the valuation report says. But if it's habitable and good state of repair, then should be all right. Should be good. It's now a good time to first time buy. The interest rate repayments worry me. So the answer to that is now a good time to buy. The interest rates and repayments worry you. If the interest rates and repayments worry you, then I would sense it's probably not good for you to buy. It comes down to your own personal view and circumstances. If you, for example, can afford the repayments and you found somewhere you want to live, then fine, yeah, absolutely, no problem in buying now. You've got to remember that through the whole cycle of home ownership, prices go up, prices come down, rates go up, rates go down. So you'll see a bit of this as you go on. But you need to look at it from a very selfish perspective. It's only a question that you can answer because it's very much dependent on you and your affordability. So yeah, I mean, you'll hear all kinds of doom and gloom, or other people saying now's the time to buy, or now's not. You need to ignore that and take it down to the bare facts of your situation and what you want to do. Why is economy? Okay. What would I need to remortgage? Well, a mortgage, a house, and potentially not to be in your fixed term coming to an end. So that's it really. We don't receive our deposit till January. Is that a problem by putting an offer in now? Yes, potentially, because you need to pay the deposit on exchange of contracts. So it just depends how far out how long that is going to take. The estate agent, the solicitor, and mortgage advisor will all want to see proof of deposit before you can generally proceed. So you are going to need that pretty much to hand, because that deposit does need paying. And if you put an offer in now, say you bought a new build, for example, they are so keen for you to exchange ASAP. Now they want you really to exchange within 28 days. So that's, if you put an offer in now, January's going to be too late. It's from a trust fund, so would a letter from the trustees be enough? Difficult. It really depends on the view of the solicitor and the seller. Like I said, at exchange, the deposit needs to be paid, so a letter isn't going to cut it. In the build up, it could be enough, but I can't promise. Yeah, normally people want to see the hard cash in an account for the deposit. No problem. Oh, I need to change that. Let's change how that build. Need to change how that is billed. Yeah. No problem. You are very welcome. It is quiet on here this morning. I think everyone's got that same Monday feeling that I've got. We've got some good questions, interesting questions this morning. I like that. I do like that. So, yeah. Ooh, why are arrangement fees so high to buy time? I think they are high so that the lenders can offer slightly better rates, to be honest with you. Um, what's that other one? Yeah, they are very high, and it's literally down to being able to offer more competitive rates, I think. Or it's just another way of lender making money, isn't it? Lenders making money because we've had a lot of landlords pulling out of the market. So yeah, they want to make money out of the ones that remain, unfortunately. But yeah, there are obviously ones around that are a fixed rate. A lot of them at the moment are a percentage of the loan, so 3, 5, 6, 7%, which can be huge. But there are ones out there that are like 1995 or 995. There are fixed ones. So if that is really important, obviously the fee, then make sure you speak to an advisor and tell them that's a key consideration of the new product. It's got to have the lowest fee as possible. There are some out there without a fee, so there are, but they tend to be a little cheaper. Do I need to send my help to buy ISA closed letter before signing the contract? That is all to do with the solicitor. Your solicitor will deal with all of that. Can I start a limited company with friends to buy properties and still keep LISA account to buy? I'm not sure on the ins and outs of that. I'm not sure. Not sure. Let me have a look. Virtual voice. Yeah, I'd have thought you need to look into it a bit more. Don't take this as gospel, but just from looking on the website, it's all to do with buying your first home. So I'm not sure. Because, of course, if you're buying a buy to let, it's not going to be your home, is it? So meet all the your first home. Yeah, tricky. You probably need to speak to a solicitor about that one. Hmm. Yeah, speak to a solicitor. Yeah, there's nothing on here that actually spells out the criteria for buying your first home. Yeah, property is 45 or 450 or less, and friends and a solicitor actually purchase, the ISA provider will pay the funds directly to them. Yeah, I would speak to a solicitor. I can't give that advice. Very quiet. Very quiet indeed. Do, 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 do. Letter from school. They started rehearsing for the nativity. Fantastic. That's an hour and a half of my life I must sacrifice for that. Right, I'm probably going to wrap this up because it's got quiet and got a few things to do. I have a property in a single name and want to add a second person. What's the process and cost involved? What do you want to add them to? The mortgage and the deeds, or just the deeds? If it's just the deeds, then you need to go through a solicitor and they will give you a cost for that. If it is the mortgage, then just contact your lender and they will assess that person and see if they can be added onto the mortgage. If they're going on the mortgage, the lender will probably want them to be on the deeds. So the cost involved is probably going to be the solicitor costs. No problem. Right, as I say, I'm going to wrap this up because we've been on for what, 45 minutes. Got a couple of things I need to be cracking on with. So yeah, all the best to you. I hope you have a cracking day, and yeah, maybe we'll speak again soon. Thank you for joining me.